Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some information on oil and energy, mainly those two, oil energy in general, and give you what I'm seeing as the latest information. I'm also going to go over real estate on the second half of the current monthly trends report for April 2022. So you can see how the real estate market in the United States is doing. So it's energy in the first half, real estate in the second half. So let's dive in. We've got OPEC kingpins warn about world's dwindling energy capacity. I have never seen these things, says Saudi oil minister. Comments come as gasoline prices rose to record in the U.S. The oil ministers of Saudi Arabia and United Arab Emirates warn that spare capacity is decreasing in all energy sectors as producers slash investment, causing everything from crude to diesel and natural gas to trade at or near record highs. I'm a dinosaur, but I've never seen these things, Saudi Minister Prince Salman says, who's been attending OPEC meetings since 1980s, said Tuesday at a conference in Abu Dhabi, referring to the surge in prices for refined products. The world needs to wake up to an existing reality. The world is running out of energy capacity at all levels. So I thought that was pretty big. And again, this is the same thing here. The world needs to wake up to an existing reality. The world is running out of energy capacity at all levels. So coming on down, it says, what happens when a market that is already short oil and now trying to wean off Russian supply realizes that OPEC is close to running out of spare capacity? What is going to happen? Good question. And I don't have the answer. Coming on down, it says headline, White House says federal gasoline tax holiday is an option that remains on the table. Tax cuts and fuel stimulus payments continue to support oil and gas demand despite rising prices and slowing economies. I also think tax cuts are a better solution than SPR releases to reduce consumer pain at the pump. It more directly addresses the issue. We've got a recent oil inventory perspective from Morgan Stanley. Between the reopening and declining inventories, the fundamentals look good for oil once China reopens. It says, and nice reminder of the holistic view of the oil market with a total oil inventories chart from Morgan Stanley I just came across. Low inventories equal high prices. This is 2022. 2021's the line here. And then we've got the 5-year average in the middle. So we are far below the average for oil inventories. Coming all the way back up, we've got some thoughts on oil here. The bearish factors are ongoing SPR release, the rising interest rates in the market crashing, and then China partially locked down. The bullish fundamental factors are low and declining inventories despite the above, very strong refined product demand and pricing, summer driving and travel soon. I think the bullish factors are going to outweigh the bearish factors here shortly. That's at least my take. It says U.S. officials asked Brazil's Petrobras to boost oil output, but state-owned oil firm said it could not. More from the Saudis on running out of energy. It says Saudi energy prince saying the world needs to wake up to an existing reality. The world is running out of energy capacity at all levels, including the SPRs. This is reality. Coming on up, going back to Eric, in April 8 of the 10 largest OPEC members underproduced their quota, forsaking hundreds of millions in revenue. Why? Years of insufficient investment during lean times when social spending was prioritized. Lest regime change be risked, years in the making equals years in the fixing. And we have not come up to the 2016 pre-OPEC curtailment average at the top here. We have not come up to that level. So I don't know if they have the capacity that everyone thinks they have. They can't just open the floodgates. They are open. Coming on down, this is the price of crude oil. You can see it on our daily technical analysis. Breaking to the upside, we're going to get a retest move. This is what we look at. Resistance coming in the sideways movement, support and resistance, the breakout, the retest, and then the move higher. The breakout, the retest, and then the move higher. And we'll see if that move higher comes. Europe has a serious diesel problem. Net oil inventories down in April, entirely driven by diesel declines. Middle distillate minus 11.5 million barrels. Wow. Wow. Coming up back up here, we've got the 2023 enterprise value to cash flow at 100 from Eric Nuttall, the 9 Point Partners. We have a lot of very cheap companies. There's our CDEV over here at 1.4. A lot of these companies are of good value. If you guys want to join the Platinum membership, I go and chart a lot of these companies and tell you which ones I think are the best in this entire region here. And I also have videos already posted on there giving my opinion on what are my favorites and why I think they're my favorites, not just because they're cheap. And then the last one here on this particular slide, the memes. Session for Kathy. It says, these deep value stocks, are they in the room with us now? I just think that was kind of funny. Hopefully that doesn't, jinx our deep value stock sector. But that's what I've got for this. Now, I'm going to go into the latest real estate. This is the second half, the April 2022 monthly housing market trends report. I look at the inventory levels. The three that I think are important are active inventory, the days on the market, and then the home prices. Those are the big ones. So just doing a quick overview, this is the active listing count for April of 2022. April 2022 is still down 12.2% year over year, below an already incredibly low 2021. The inventory is not coming back up at this time. We'll have to continue to monitor it. And remember, this is seasonal, the way that this goes. But it hasn't made much headway. Interest rates hasn't impacted the active inventory that much, if at all. If anything, it continues to decline at greater and greater rates. We'll see what happens over the next few months or the rest of the year to see if this inventory actually comes back. But the active listing count still remains incredibly bullish at only 409,000 active listings. And I don't know how many people we have looking for homes at this time. It's probably far greater than that. So there's multiple buyers for every house that's out there. I'm going to go down to days on the market. This is another important one. We are still down 6 days over the year before. So not only do we have less inventory, that inventory is moving faster. This metric is still gaining momentum in the wrong way for a person who is a bear on this sector. The bulls are still in control until they are not. And I'm going to remain bullish even when the days on the market go back to 2019, 2018, way up here, and the inventory were to go back up even to the 2018, 2019 levels when we were seeing 3, 4, 5, 6, 7% increases in median listing prices during that time frame, just coming on the back half of this tightness in the markets. Now, the median listing price is up 14.2% in April of 2022. Again, we're going to have to see how the interest rates, remember, the interest rates have moved vastly, very quickly. So we have to see how that impacts this price over the next few months. April might be closings of a few months before April. So it might be February, March closings and closing in April. But they were under contract in March and February. So we have to see how this impacts it. Right now, I remain a bull because the information and all the data is bullish. So that's where I'm at with that respect. And so when we look at the big picture view and the fundamentals, the housing market is still strong. I'm going to remain a bull until the data tells me otherwise. And even if this were to come backwards on us, the inventory is going up and the price is starting to level off and not be as steep, I'm still going to remain a bull if they're going up. And remember, I'm looking at housing volumes and housing starts. That data is released differently, at a different time. But the existing market that's out there is remaining very tight, and the prices have been continuing to go higher. So we'll see how the rising interest rates and rising home prices in relationship to each other, how that impacts the demand and inventory levels and the pricing. Oil market is still good. It's still very tight. I don't think OPEC has any spare capacity. They're still releasing oil from strategic petroleum reserves worldwide. I still think that we are in a massive bull market. Nothing's been solved. And even if we have a slight recession here, or if we have a pullback, however you want to say it, I don't think that these oil stocks are going to go down dramatically. If they do, it's just going to be that much better value to purchase. So I still remain a bull in the energy sector in general. That includes uranium and natural gas and oil and everything that's energy related. I'm still a bull on the precious metals. I like my platinum. You know how I like my platinum. And I do like silver in the long term. But I still remain a bull in all these things, guys. And I'm still a bull in real estate until the data tells me otherwise. All right, guys. We'll catch you later. If you guys like the analysis, give me a thumbs up. Subscribe to the channel. Subscribe to the website. Platinum membership below if you're interested in signing up to gain more information like this. I post this all on the website there, and you can see it. So thanks for viewing, and we'll catch you next time. This is Finding Value.